Hello everybody, what's going on? Few important updates are coming from NIO's end. Company is pulling one of the biggest strategic turnaround in the EV market right now. And today we have massive news directly from NIO's founder chairman and CEO Li Bin. So if you are holding NIO stock or keeping a close watch on Chinese EV macro trends, you need to pay close attention to the structural shift unfolding right now. Li Bin just delivered a bold forecast. By 2030, new energy vehicles are expected to make up over 90% of total automotive market. Think about that for a second. We are no longer talking about slow incremental growth. We are talking about the near total replacement of legacy internal combustion engine in less than just 6 years. The latest industry data proves this is not just optimistic commentary. Pure battery electric vehicle BEVs are hitting brand new monthly highs for 4 consecutive months. At the same time, top EV brands are experiencing a massive 68% jump in year over year sales. This tide is turning rapidly, but what makes NIO uniquely positioned in this surge is precisely where they are winning the highest margin premium tier of the market, which is a great thing, I would say. Now let's look at the hard figure in the premium luxury market for vehicle priced above 400,000 RMB. The NIO ES8 has officially taken the top spot as the bestseller model, moving even further up the ladder to ultra luxury vehicle price above 500,000 RMB. The flagship ES9 leads the entire segment as best-selling BEVs. So why is this pricing control so critical for Wall Street equity valuation? Historically, bear case against EV startups argued that companies would destroy their margin chasing low-cost volume in price war. The good thing here is that NIO completely rejected that path by locking down dominance in 400 to 500,000 RMB plus category. NIO protect its average selling price. High ASP directly shield vehicles' gross margin, building the foundational bridge towards sustained long-term profitability. Speaking at 2026 China's Chief Economics Fudan School of Management Science and Technology Innovation Forum, Li Bin shared critical insights on how the industry is evolving. He stated that 2026 is a pivotal year for new energy vehicles, marked by intense overall competition as Chinese automotive sector enters four distinct new stages. First, brutal final stage. Over the next 3 to 5 years, the ultimate market winners and losers will be decided. The next 2 years represents a crucial survival window, determining which car company keeps up and which gets left behind. Second important thing, accelerating pure electric penetration. Pure BEVs are the only powertrain type currently growing in China, while plug-in hybrids, EREVs, and pure gasoline vehicles are declining. Charging and battery swap infrastructures have reached a true inflection point, validating Liebman's pure electric inflection point theory. Third thing which he talked about is transition to brand clarification. As vehicle tech converges and feature sets harmonize, consumer behavior is shifting from comparing specs to choosing a brand first, restoring traditional automotive brand loyalty dynamics. And his last point was shift to systematic competition. Winning no longer relies on a single capabilities like software or design. Competition has become a comprehensive marathon covering R&D, supply chain, manufacturing, quality, sales, services, and capital markets. This four-stage framework directly explain why NIO's long-term strategy is finally paying off while competitors' vehicles are becoming harmonized on tech specs. NIO's brand equity allow it to stand out during this brand clarification phase. Furthermore, as pure electric vehicle outpace hybrids, NIO's single biggest competitive moat is its battery swapping technology. While other automakers face charging grid bottleneck during peak travels, NIO drivers swap a battery in under 3 minutes. As pure electric adoption accelerates towards that 90% target, NIO's swap network transforms from a capital heavy expenditure into a high margin sticky service network. When you look at systematic competition, NIO has spent years putting all the pieces together: self deployed chip, vertical integration, proprietary battery tech, an unmatched service network, and premium brand status. In a marathon on a muddy road, the winner isn't the player with the short term sprint speed. It's the company who build with the structural stamina to endure the mud. Between scaling sub-brand volume, dominant market share from the flagship ES8 and ES9, and BEVs pulling away as the clear powertrain winners, the long-term bullish thesis for NIO is clearer than ever. So, if you believe in transition toward a 90% NAV market by 2030, I would say that NIO isn't just surviving this brutal consolidation phase. It is establishing itself as the dominant powerhouse in luxury electric mobility. So keep your eyes on delivery scale and margin expansion over the upcoming quarters, because the setup for a massive long term market re rating is officially taking shape.